Well, welcome everyone. Thank you for joining us today. I'm excited to be here with VP of Asset Management, Ryan Thie. And I'm Jacey Crawford. I am our content manager here at the BAM Companies. Ryan, can you introduce yourself?
Yeah, Ryan Thie, Vice President of Asset Management, as Jacey mentioned. Been with BAM for 10 years now. And if I was only allowed one sentence to say what I do here, I oversee our execution of our investment strategy and the business plan set forth for each of the assets in our portfolio.
So for anybody who's watching who is new to BAM Capital and the BAM Companies, can you briefly explain what we do?
So BAM Capital is a vertically integrated fund manager and owner-operator of institutional quality apartment communities across 7 states in the Midwest. We steward over $400 million in capital for over 1,400 loyal members, and that equates to over $1 billion in assets under management across our various investment vehicles, our 5 funds, our 4 single assets, and 2, well, now it'd be 3 joint venture development assets as well.
So tell us about that third joint venture development.
So Crossing 5 is going to be a 315 unit Class A luxury apartment community located in Plainfield, Indiana, which is a suburb on the southwest side of Indianapolis, Indiana.
Why Plainfield?
Plainfield is very well situated. It's 20 minutes from downtown Indianapolis, and even better yet, it's 10 minutes from the award-winning Indianapolis International Airport, and also 10 minutes from Crossing 5 at that same Indianapolis International Airport is FedEx's second largest hub in the entire world, second only to its Memphis, Tennessee home base.
Wow.
There's over 4,000 employees at that site. They're in the middle of a $1.5 billion expansion right now, and they process over 100,000 packages an hour at that facility. And odds are a few of those have probably hit my porch in the last week.
And I mean, at the airport alone, 11,000 jobs.
Yeah, it's well located. It's almost the middle of the state of Indiana, which is the crossroads of America. You've got 5 major interstates that intersect at Indianapolis, one of them being I-70, which is basically where our airport sits and Plainfield sits. And across I-70 from the airport FedEx is the Ameriplex, which is a 1,500-acre site with over 12.5 million square feet of industrial, office, and flex space for operations, admin, and logistics functions for companies like Pepsi, Allstate, Quaker Oats, the state of Indiana, and even FedEx has a pretty sizable presence as well at the Ameriplex.
So clearly the location is great for the working professional, but it's also a good location for entertainment.
Yeah, so the micro location of Crossing 5 is exceptional. It's prime location within the heart of Plainfield, across the street from the Shops at Perry Crossing, which is a high-end shopping center, entertainment, dining area. It really caters to that live, work, play lifestyle that a lot of the renters these days desire.
So aside from everything we've just mentioned, what makes this project unique compared to other projects?
Well, what stands out most to me about Crossing 5, if you look at the renderings, it's got a really diverse product type. And what do I mean by that? Well, if you look at it, it's got a large, what I call like center load, like it's a 4-story mid-rise apartment building like you'd see in an urban setting, but it's also complemented by townhomes and cottages. So it offers that unique product mix that caters to different types of renters. You've got some that might want to live in a smaller, more dense apartment setting. Others might want to live in that cottage townhome environment where you've got private entrances, a little bit of a yard, and it caters to a lot of different renters, Jacey.
So let's dive into the partnership with Hart, the developer in this project. Can you talk a bit about what they bring to the table?
So Hart is a very well-respected Indianapolis area-based developer. They've been in existence since 1976. They've constructed thousands of units across central Indiana and select markets of Indiana in that time. And their current portfolio is almost entirely within central Indiana. And as a matter of fact, their corporate office, Jacey, is actually walking distance from our corporate office for BAM Capital here in Carmel, Indiana.
Can you talk about some of the past successes and track record of Hart that make you and the rest of us at BAM Capital so confident that this is a good partnership?
Well, they have such a phenomenal reputation in the marketplace and just the industry at large for building and managing quality apartment communities in phenomenal locations. They've won numerous awards through the Indiana Apartment Association, both for their communities they've built and managed, as well as their company alone. And of their four most recent realized exits, if you look at performance, the internal rate of return, or IRR, that they underwrote ranged from 17 to 35% on a 10-year hold on those projects. And they went on to achieve, on an average 5-year hold period, a 28 to 55% internal rate of return, or IRR, on those projects. And anecdotally, BAM Capital has actually acquired 2 assets from Jacey Hart in the last 4 years that Jacey Hart built and managed. And we can certainly attest to the quality of the construction, the quality of the product, and also the management team over at Jacey Hart.
And what are those assets?
So the first one that we acquired in 2020, we've actually since exited, is Pebblebrook Village, which is located up here in Noblesville, Indiana, northern suburb of Indianapolis. They built that one in 2001, held on to it for a very long time, actually. But the asset really stood the test of time. Very, very well built and well managed. And then the other one, actually, that we currently own is Ivy Townsend Flats in West Lafayette, Indiana, about an hour northwest of Indianapolis. And beautiful asset, also similar to Crossing 5 in that it's got kind of those denser garden style, kind of mid-rise, 4-story, 3-4-story apartment buildings, complemented by townhomes and cottages. And that asset has also held up really well, performed well for them, performing even better for us. So.
Yeah, I was just up there a few weeks ago at Ivy. Beautiful, beautiful property. Jacey Hart clearly knows what they're doing.
We're big fans of their work, needless to say.
So walk us through their plans for Crossing 5 and the amenities and features that'll come with that.
So the units are going to have the state-of-the-art finishes that renters are going to expect these days: quartz countertops, stainless steel appliances, nice closet shelving, patios and balconies, and then oversized windows letting in tons of natural light. And then they're also going to have Bluetooth unit entry and programmable thermostats as well. And then the community amenities, there's going to be a fitness center, resort-style swimming pool, not one but 2 pickleball courts, Jacey. And then they're going to have a package room, co-working space, grilling stations, dog park, pet spa, just all the community amenities as well that these same high-end renters are gonna expect.
That is quite the slate. And what really caught my ear was the 2 pickleball courts. That's almost unheard of.
Yeah, rapidly growing sport, and even rapidly growing suburb.
So let's talk about the suburb. Can you talk a little bit about the demographics in Plainfield and the surrounding community?
Yeah, I said rapidly growing, 52% population growth in the last 14 years for Plainfield.
Wow.
And then the median household income is $83,000, which is just above the national average of $75,000. And also the affordability elements, very nice as well. 27% wallet share of rent when you take the $19.36 a month chunk rents at Crossing 5 to that $83,000 median household income. National average for wallet share rent is 30 to 40%. Which, what do I mean by wallet share rent? So wallet share rent is essentially the percentage of one's income that goes towards rent. National average is really in that like mid 30s, 33 to 35%. Some of the bigger cities like Chicago, New York, Los Angeles, it's even pushing into the mid 40s. So very, very affordable place to live, and renting at Crossing 5 is over 1.5 times more affordable than owning a home in Plainfield.
So aside from the affluent demographic, what else do you see attractive about the Plainfield submarket?
Well, it really benefits from the proximity to downtown Indianapolis and the airport, like I mentioned, but it also has really strong schools, very well rated school system. It's got nice recreational amenities and retail, parks, hiking, walking trails. But when people evaluate where their place is, they want 3 things. They want to be close to where they work. They want to be close to good shopping and dining and recreational amenities. And if it applies, they want to send their children to the best schools in the area. So, and one final point I'll also make about Plainfield is that it really, of the Indianapolis suburbs, it offers one of the better room to grow propositions in terms of available land, path of development. Some of the other upper echelon suburbs, like a Plainfield, are starting to run out of room. It's starting to cost a little bit more to live in those locations, and folks are starting to find alternatives like Plainfield that are a little more affordable and offer just as nice of a place to live as some of those other suburbs that are really have expanded out.
So clearly, great location. Going to be a great property with a great partner. So we talked about the fun stuff. Let's get into the numbers. Can you talk
Stuff I
about
like.
the stuff you like?
So simply said, on a 4-year hold, we're expecting an internal rate of return, or IRR, of 20 to 23%. So simply said, over 4 years, we're looking to double our investors' money.
And what is the expected investment timeline with this as far as construction to completion to exit?
So looking to break ground in November of 2024. First unit should deliver within about a year, so we're looking into 2025 there, and then the full project construction should be completed by the fall of 2026. So we'll start lease up upon those first units around December 2025, and we expect to achieve stabilization, which we define as 80% of the units being occupied by July 2027, and then 4-year hold, so we'll look to exit in 2028.
Now, we don't want to seem overly optimistic. It's not always sunshine and rainbows. Can you talk about some of the risks associated with this project?
Well, there's always risk with ground up development, any asset class of real estate, construction, lease up risk being the biggest. Supply chain issues, cost management, weather factors in, permitting, approvals, all these things, and then lease up. You never know how long that's going to take, but I would say overall, to mitigate that risk from BAM Capital standpoint, it all comes back to our development management partner, Jacey Hart. They have the track record and the experience. They've been through tough market conditions and events like the great financial crisis, 08, 09. They were around for that and survived that quite well. And then even recently, COVID and all the inflation the last couple of years, they've still thrived through all of that. So we have a high level of confidence in our operating and development partner, Jacey Hart.
So speaking of economic downturn, how do you think a project like Crossing 5 will perform in the current economic environment?
Well, higher interest rates and elevated construction costs have certainly hampered new development projects going forward. And I'd say this is a tailwind for Crossing 5 as new starts for multifamily are down drastically from what they were compared to previous years and even the longer term average in terms of new starts of apartment communities. So we've seen this wave of completions and new apartments coming online in the last 18 months, but that all is really starting to wind down. And there's not a lot of new product coming out of the ground right now. So when Crossing 5 is looking to deliver here in 2025, 2026, there's not going to be a lot of new competition. All the existing product, even in Plainfield, that's come out of the ground in the last couple of years and delivered as of late, is already mostly leased up, if not all the way leased up. So we are pretty well set up in terms of timing of when this is going to be delivered and other starts and deliveries in that time span.
Yeah, sounds like no better time to invest than now.
Absolutely.
So what is the minimum investment required for this project?
It's $100,000. And Jacey, I mean, all this talk, I'm ready to invest. Where do I go to learn more about how to get in on this?
Well, everyone can go to bamcapital.com, sign up for our investor portal if you're not already. That has all the details and numbers related to Crossing 5. Ryan, thank you so much for today, for giving us all the details about the project. It's very exciting, this incredible project, joint venture development with Jacey Hart. So thank you, everyone, for joining us, and we look forward to hearing from you soon.